In El Paso, the average sales price is about $175,000. At this price point, if you were to make every payment for 30 years with a 3.25 interest rate, you would be paying $99,000 in interest to the bank. In this video, I'm going to show you two methods to lower the interest you pay to the bank, and as a result, slash the life of the loan by several years. Thank you so much for tuning in. This is Israel Favela with Morena Real Estate Group. The first method of paying off your mortgage early is bi-weekly payments. So instead of making 12 payments every year, you'll be making 26 half payments every year, which in turn equals to 13 payments every year. So as a result, you can see right out of the gate that you'll be making an extra payment every year. Now, this payment affects the interest you pay tremendously, especially if you're at the beginning stages of your mortgage, because that is when you pay the most interest. For example, with a loan of $175,000 at a 3.25 interest rate over 30 years, you'll save a little under $14,000 and pay off your mortgage 4 years earlier. You know, it's important to note to contact your mortgage company to see if they offer the bi-weekly payments. The second method is very similar to the first method, and that's to make an extra payment to the principal every year, but maintaining the 12 monthly payments. The question here, though, is how to strategically spread the payment over the year. Should you spread it out monthly, quarterly, or at the end of the year? Using the same example of $175,000 with a 3.25 interest rate over 30 years will be a payment of $760. Now, on a side note, this does not include the property taxes, home insurance, private mortgage insurance, or HOA fees, just the interest and principal only. Let's take a look at an example for each scenario. For the first scenario, if at the end of each year you place a $760 payment towards your principal, you'll save $13,063.39 and also pay off your loan 3 years and 7 months earlier. In the second scenario, if you want to spread your extra payment quarterly, you'll divide the $760 by 4 and it'll be $190 for every quarter. In this example, you'll save $13,359.59, and you'll also pay your loan 3 years and 7 months earlier. For the last scenario, we'll spread the extra payment monthly, and in this example, you basically divide the $760 by 12, which equals to $63.33 every month towards your principal. In this example, you'll save $13,444.16 and pay off your loan 3 years and 7 months earlier. So based on this example, it's better to partition the full extra payment into months to save the most in interest and cut down the life of the loan. And for me personally and psychologically, I think it's easier to budget for an additional monthly payment towards a principal anyway. I do need to mention this so that there's no confusion. If you have a healthy savings account and you received a bonus from work, or like many of us received a stimulus check, I recommend you place that into your principal immediately and not partition your payments, because the quicker that you can drop your principal, the less interest you're going to pay in the long run. For the last example, I want to show you how you can play with the numbers so that you can come up with your own goal in paying off your mortgage quicker. I like to use Dave Ramsey's mortgage payoff calculator, and I also provided the link below and also in my Instagram bio. But the reason I like this is because you can start from the beginning of the loan or from where your loan is currently at. So if you notice on this page, it gives you 4 options: the loan amount, the interest rate, the amount of years you're going to finance, and when your first payment is. So let's go ahead and put $175,000 with a 3.25 interest rate over 30 years, and let's start our first payment January 1st, 2021. So with the next page, once you go into the next page, it'll give you an option of putting additional amount to your principal, the frequency that you want to put it in, and when that first additional payment's going to be. So let's say, just for the example, you want to be more aggressive in paying off your mortgage and pay an additional $255 a month. This is equivalent to paying 4 monthly payments towards your principal every single year. With this aggressive approach, you'll save $38,000 and pay your mortgage off 10 years and 7 months earlier. I recommend you guys look into your budget just to see how much you can put additionally into your principal, and just experiment with these numbers. If you guys are still stuck on how to use a calculator, feel free to reach out to me. I'd be happy to help. In closing, bi-weekly payments and paying more towards your principal are great methods to pay off your mortgage sooner and also save on interest. From the examples, you can see that even giving an additional $63 towards your principal monthly can not only save you on interest, but also cut so many years off your loan. Hey guys, thank you so much again for tuning in. I hope this video was informative and it brought you some insight on how to save money by paying less interest and shortening the life of your loan. Feel free to share this video to anyone that needs to hear it, and I hope you guys have a good day.